Hey there traders, Todd Gordon, tradinganalysis.com. Happy Thursday. Nice little bit of volatility today. I also want to say happy birthday to my 1-month-old twin boys, Jake and Brody. Lucky February 13th, great day number. It's a Fibonacci number, of course, and they're 1 month old. They're doing great. So nice little bit of volatility we've seen today. We've seen stocks sell off. You've seen the bond market rallying, interest rates sell off. Good little bit of volatility. I like it. And first chart I want to look at here is the euro. Okay, the euro has been tracing out an ending diagonal. Now this is a key Elliott wave pattern. It's kind of a consolidation pattern, but it does have some trend change to it. It happens at the end of Elliott wave moves, like the C wave of an ABC or wave 5 of a 5-wave move. The point is, when you see an ending diagonal, this means the predominant trend could be about to reverse and reverse sharply. So what we've seen is the requisite 5-wave move. 1, 2, 3, 4, 5. Now, specifically, what's interesting is we've also come up to test the very common Fibonacci resistance within a wave 5 of an ending diagonal. So I'm very hesitant to call the top of this move, but there's two factors here that are suggesting that this could in fact be the case. One, it's wave 5 of an ending diagonal, and two, we've collided and tested a pair of green Fibonacci resistance levels, which using our software, that tells you that's the ideal level for these to stop. So we've seen a pretty good resistance, a pretty good snapback from that point, which makes me think we could be onto something here. Okay, lower stocks, higher bonds are driving dollar buying, but we're also seeing some euro selling across the board with euro yen. So I'm interested, and we're going to look at the short side. But there's another reason I want to be careful of calling the top in the euro. Specifically, euro, a lot of times when it reaches key round levels, okay, like 138, like 139, and especially 140, it's a very option-driven market. And a lot of times the markets will want to go up, trigger those options, and then dump it. We didn't get to the 140 level. So I'm a little cautious that way. So we'll take a look at some smaller time frame charts. We'll set up some trades. I also want to look at the Aussie dollar. So I'm going to kind of straddle the fence here a little bit with this trade. So let's just do this. I'm going to go over to the 3-hour chart here, and then let's just set up a resistance level here. Go into the full screen, Control Shift N, and let me just give you a key level to watch on the way back. I do think we'll bounce around the 138.30 level. If we hold below 139, your key 50% retracement, you could look to be short euro, okay, for downside continuation. Now, another market I want to take a look at that is not really confirmed with what we're seeing here is the Australian dollar. Okay, so let me just go over to Aussie. This guy's been performing well, even with some pretty weak Chinese data. All right, so let me get rid of this. Okay. Now, here's what's going on in the Aussie daily. Okay, we're looking at 1, 2, and then another 1, 2. There's a possible longer-term breakout coming here in the Australian dollar, which, of course, if we're looking to be short the euro, that's a kind of a contradictory market force here. So I do want to keep an eye on this chart. Now, what's interesting is we did get an apex buy signal on our Wave Trader scan here, which is a module used to scan for entries within Elliott Wave and Fibonacci key resistance and support zones. We did get triggered long here, and we're looking for upside continuation. Okay, so from the daily, let's get down to the 3-hour, and I want to show you a similar level in Aussie. Okay, that probably is going to be the line in the sand for this trade. So here's that daily reversal. We've moved up in 5 waves, and now we're pulling back in wave 2. Here's the deal. Okay, your green level is the ideal wave 2 pullback. That's at 89.91. That's your ideal pullback zone. If we get below the 78.6% retracement, then I don't think this wave 2 is a wave 2. It could be something different. And you might say to yourself, well, what good does that do? It does you a lot of good. Because if Aussie can't hold this support level, we're quickly going to go back to the euro, and we are going to be looking for downside continuation based on this possible ending diagonal. So the trade is, I want to look to sell euro back in 130 with stops above 139.60. Okay, that should allow Aussie dollar to bounce from that 61% retracement, maybe the 78.6% retracement, but then we want to see both the markets fail and then come down, and of course we want to see confirmation from what we've seen today, which is lower stocks, higher bonds, lower bond yields, etc., etc. All right, so that's the trade. Use intermarkets, use other currency pairs to confirm your trade, to filter your technical analysis and make sure you're on the right path. All right, good luck trading. Hope it helps, and I'll see you the next time.